Hey guys, this is the last video I'm making in 2021, and I always like to look back at the year and kind of take stock of what happened and what I can expect in the following year. And so when you think about 2021 in the stock market, it was a crazy year. The S&P 500 is up 27%. It had the most all-time highs in 26 years. Almost 30% of all trading days were new all-time highs, which is just insane. When you think about the successes and the failures, a company like Apple just keeps marching on. We're closing on a $3 trillion valuation right now. And if you invested your money in stocks like AMC or GameStop, you had triple-digit returns. On the other hand, on the side of failures, if you invested in Chinese stocks and held on, it was a complete disaster. Some of the Chinese education companies are down more than 90%. And we all remember the fire sale that the $20 billion family office called Archegos Capital Management had in stocks like Viacom and Discovery. So like I say, completely crazy year, and whoever you talk to on the street, whatever analysts is putting their opinions forward for 2022, they're all telling you that it's unlikely that we repeat the same performance in 2022. And so you want to invest in good stories, in companies that will do well even in a difficult market. So today I'm going to give you the best ideas you can invest in 2022. If you follow this channel, you know that at the very beginning of each quarter, I talk about the so-called conviction list. The conviction list is a report that my friends at Deutsche Bank put out every quarter where they present the best stock ideas to invest in for the following 12 months. And they just update it and keep track of the performance. And when you look at the performance versus the wider index, they usually tend to outperform the index, and the stocks typically tend to do extremely well. And so this quarter, the report that just came out has 29 names, 29 stocks. I'm going to leave all of the details below the video, and I'm going to talk about 5 of my favorite picks. So if you have any questions about any of the names that I am not talking about today in the video, in the 10 minutes that we have kind of today, bring it up in the comment section and we can talk about the rationale behind why the name is on the report. All right, let's dive right in. All right, 5 stocks to talk about in detail, but before we get there, I do want to mention Delta Airlines and Las Vegas Sands. These two companies are classic reopening plays. They are still part of the report this quarter, but I'm not going to talk about them today because I talked about them 3 months ago in the last conviction report video. And I invite you to look at it. The link's above me here. I'll leave it below the video as well. Las Vegas Sands and Delta Airlines are part of my portfolio. They are really amazing reopening plays that we should see do extremely well in 2022. I talk about them in detail in the last video, so please go check it out because I don't want you to miss out on these companies. But the company number one, the first company I want to talk about today is Hertz, the obviously rental car company, ticker HTZ. We've seen the drama of 2020, 2021, the financial restructuring plan, how really Hertz kind of suffered when everything shut down at the beginning of COVID-19. But this is a classic kind of turnaround story where right now they are benefiting from the dynamics of the rental car market, which, there's a huge imbalance between supply and demand. The rising prices of the cars, of used cars, but also a lot of key initiatives that they are putting in place. And when you look at some of the operational metrics, the revenue per day and the revenue per unit, the two kind of metrics that analysts look at when they analyze the rental car market, Hertz is well above the 2019 levels by as much as 40 to 50%. So they are making a lot more money than they ever did a couple of years ago before COVID-19 started. The current management there is focused on a lot of new key initiatives. One is the huge move into electric vehicles. And you've seen a few months ago, they put out this order for 100,000 Teslas, which made a lot of headlines, right? The stock market had a huge jump on that day and kind of since calmed down, but the strategy is still there. They are moving in the EV market in a big way as a first kind of market mover advantage in the rental car business. So they will do very well there. In particular with the corporate market, right? Because people and companies want to be seen as kind of ESG friendly now. They will be renting electric vehicles more than the classic internal combustion engine type, the typical cars that we all have been driving for years. They also have a partnership and a plan to offload as much as half of these Teslas eventually to the fleet that are available to Uber drivers. So that will extend the life of these cars and lower the depreciation that they have to kind of account for. The second initiative they have in place is with the American Express Business Travel Group, and that's going to increase the market share and the margins in the corporate travel sector. So that's going to really help them regain part of that big corporate sector that is gonna, again, on the reopening of 2022, do really well. And finally, they also have a partnership with Carvana. Typically, rental car companies rely on auctions to get rid and kind of exit the fleets, the cars that they don't want to have anymore in their fleets. And the partnership with Carvana is going to help them reduce the reliance on auctions and kind of manage this process better and cheaper. So a lot of strategic initiatives, kind of plans to revamp the company, take it to the next decade in a better way. Now, when you look at the stock price, on a valuation perspective, Hertz is trading at a meaningful discount to Avis. So that's really kind of where the opportunity lies. And Hertz also has a $2 billion repurchase authorization for buybacks, and the market expects that they will go for the full $2 billion. So there's going to be a huge tailwind for the stock. So Hertz, a play that people didn't want to touch 18 months ago. Obviously, when everything shut down, they had the massive restructuring, but now they are extremely well positioned to rebound as the economy reopens in 2022. The second company I want to talk about is NIO, the Chinese electric vehicle maker. And I talked about the Chinese companies in the introduction of this video and how much Chinese companies in general suffered in 2021. But at this point, the potential of that NIO has and the roadmap for new products coming online soon, and kind of the how much the stock has really sold off, presents a great risk-reward opportunity here, and it should be part of your portfolio, even to some small limited kind of amount. So let's talk about the details of this company, right? The stock really suffered for three reasons. One is the supply chain constraints, which are prevalent in the car industry right now, that will ultimately get resolved. A lack of new models, and also the risk of US delisting, right? This is kind of the story of delisting some of the Chinese stocks, the ADRs that are listed in the United States. And all of these headwinds really should reverse in the coming months. The supply chain constraints will resolve themselves. NIO has 3 new models coming up online in 2022. And they are also working on a Hong Kong listing, which will kind of reduce the risk of delisting in the United States. They will be listed in Hong Kong in a kind of regular, kind of semi-Western market, right, where it's a lot easier to access trading. They are building a second factory in the second half of 2022, so they will increase the capacity for production from the current 120,000 models, 120,000 cars, to 600,000 cars. So that's 5x in terms of how much the production will increase in 2022. But really, it's all about what you believe is going to happen between kind of the US-Chinese relations and how that's going to affect the Chinese stocks. And at some point, this may continue for a few weeks or months potentially, but at some point this whole sentiment will bottom out. And currently, NIO is trading at such a huge discount to its peers and has such a great roadmap of new models coming online and the increased production that it really presents an opportunity that is skewed your way, that you kind of want to put in your portfolio, even if it's really a small amount. NIO is a great company to own. The third company on my list is SQM, and I'm going to give you my best Spanish here. SQM stands for Sociedad Química y Minera de Chile. And effectively, it's a Chilean chemicals company that's producing lithium and other industrial chemicals. But in plain English, SQM is the biggest lithium producer in the world. And so there's a theme kind of building in this video, right? I talked about Hertz and the move that Hertz is making into EV cars that order for 100,000 Teslas. I talked about NIO, a Chinese EV maker. Well, SQM is right in the middle of this whole move, of this whole transition to the EV car industry. And if you listen to somebody like Kathy Wood from ARK Invest, she talks about the fact that within a year, EV cars will be cheaper than the classic internal combustion engine cars. And this whole transition and transformation of the car industry, of how we transport ourselves, will have to happen somehow. And all of these cars, all of these vehicles will be powered by batteries made out of lithium. So SQM is right in the middle of this transformation. And whether you invest in this theme through an ETF like LIT, or directly through EV car makers like NIO or Tesla, or through the producers of lithium like SQM, you want to be part of this theme. You want to have a small allocation to these companies, whether you pick NIO, Tesla, LIT, SQM, or another one. But definitely SQM is right up there. It's on the list of Deutsche Bank recommended companies for the next 12 months, and they should do amazingly well. The next company on my list here from this conviction list report is a company that I never thought I would talk about in any of my videos, because this is not a sexy industry. But it's Goodyear Tire and Rubber, which, by the way, has a cool ticker, GT. But we all know the Goodyear tires. But Deutsche Bank has a target of $32 per share, and currently we're trading around $20, $21. So that's a kind of a 50% appreciation from current levels. But they have this target for good reasons. And it's kind of, like I said, a topic that's been building throughout this video, this whole transformation into the EV space. And I didn't know this until I started researching this industry. EV tires typically sell for more than 30% more expensive than regular tires. And the reason is because EV tires need to be more robust, because EV cars are typically heavier. The batteries are heavy, so EV cars are heavier, and they also rely more on braking. So EV cars need specific EV tires, and there's only 5 or 6 suppliers of these tires around the world. And Goodyear has so far been winning about 60% of all these contracts, including half of all the platforms for EV cars in Europe. So they have a massive win ratio on these contracts, and there's only a limited amount of producers of EV tires. And Goodyear will be a huge beneficiary from this. Aside from all the other dynamics of these markets today, with the car industry, there's a huge demand for used cars, for new cars. This is an industry that's really in 2022, as we again reopen, will do amazingly well, and Goodyear is right there as the premium supplier of all these tires. Not counting, by the way, also the acquisition that they recently made of Cooper. So Cooper allowed them to access new markets that they didn't have previously. So again, Goodyear really well positioned, not a sexy company. But like I said in the introduction of this video, we are entering a difficult market, a market that's going to be a lot more choppy. We're not going to see a 27% appreciation in the S&P 500 in 2022. And you want stories that are kind of independent from any of this volatility that we're likely going to see in the next 12 months. You want a story that's investing in a transformation that has nothing to do with what's happening in the financial circles or in internet companies. And Goodyear is right there, offering you that 50% appreciation if we get to the target that Deutsche Bank has for the stock. So buy some tires. Now, company number 5 on my list, and finally we're moving away from the car industry, from the EV theme, into fintech and payments. And the company I want to talk about is Global Payments, ticker GPN, where Deutsche Bank has a target of $237, which is a 76% upside from current levels. So GPN Global Payments is a payments company that works with merchants, with consumers, with credit card companies, and they effectively process payments, whether it's credit cards, debit cards, contactless payments. They play in the same sandbox that Square and PayPal, kind of maybe the more famous names, play in. And when you look at the whole payments industry, these internet companies that really grew massively throughout the pandemic because of this whole transformation that became just really so fast. All of these companies really corrected by about 30, 35, 40% from the highs we have seen during summer 2021. So right now they all present, Global Payments, Square, PayPal, I kind of talk about all three in the same breath here. They all present a great opportunity to enter into the future of finance, because the future of finance really is with these companies, not with typical banks. PayPal's market share exceeded Goldman's market share a long time ago. At one point they were triple in terms of market cap of what Goldman stood for. And this is really where the future of finance, of banking is. And when it comes specifically to Global Payments, right, they have a lot of good partnerships. They are one of the leaders, disruptors in this space. They have partnerships with the fintech industry. They have new partnerships with Virgin Money. But also they have about $20 billion in capital capacity for buybacks and M&A. So there's going to be a lot of tailwinds for the stock because they will use a lot of this capital to repurchase shares given current market valuations. And really the valuation at this point, after the sell-off we have seen since the summer 2021, presents a great opportunity to enter the space that you want to be in, because this is, like I said, again, a theme that is going to be here for the next 5-10 years, because this is where finance and how we bank is moving. All right, that's a wrap for 2021. A few ideas on where to put your money, how to do well in 2022, which is going to be a tricky year for investing. But more importantly, I just want to say thank you for hanging out with me over the last 12 months. Thanks for listening to the stuff that's of interest to me, whether it's the stock market, how to invest, how to manage your money better, or just talk about fintech and finance, the future of finance in general. It's been a lot of fun for me to kind of put out this content here. I appreciate all the comments that you guys are putting on the channel, the interaction we're having around some of these themes. But most importantly, I want to wish you all the best into 2022. I want to wish you a happy new year. I hope you are going to do well. The last let's say 12, 18 months really offered us a moment of introspection of what we want to do in life, what's important to us. And I hope you're doing in your life what is interesting to you and what's making you happy. So thanks for hanging out again. I will see you in a future video.